Hello guys, this is where I usually sit and actually work. Normally I stand over there and record, and while we have this very nice work area over there, I kind of like sitting here in the kitchen closet. I have my trusted 16-inch laptop and coffee. I thought today we can use Bitcoin Cash as a kind of a trading tutorial example. Bitcoin Cash surges on EDEX listing. EDEX, the digital asset exchange backed by Wall Street giants Fidelity, Citadel and Charles Schwab. But I thought we'll start with a history lesson. If you weren't around at the time, Roger Ver was one of the biggest and maybe the first big investor in Bitcoin, sometimes referred to as Bitcoin Jesus. When he was younger, he sold fireworks on eBay. And for that he got 10 months in federal prison, which kind of seemed a little crazy, but that's a good example when a setback can sometimes turn out to be a blessing in disguise. Because it was prison that made him see this Bitcoin potential, where he saw other things become money and mediums of exchange that were also divisible and in short supply and so on. And that's maybe why he dared to invest in Bitcoin already in 2011, when price was under $1 each, with serious money. Then he was one of the leading figures, maybe the leading figure, for a larger block size for the Bitcoin blockchain. The argument being that if this is a peer-to-peer electronic cash system, it can't clog up with so few users, so it needs to scale in terms of block size and performance as more users use it. On the other side of this argument were many other people, including people like Adam Back, CEO of Blockstream, who instead proposed different solutions such as the liquid sidechain and the core Lightning implementation. From a technical perspective, me coming from a telecom background, I felt the argument to increase the block size had a lot of merit, but I also understood the other perspective of never changing the protocol. Basically it's just gold and it never changes. Now a couple of months ago, the ordinals, the NFTs on Bitcoin, restarted this debate to some extent, because suddenly the average block size hit all-time high and the network started to clog up. Bitcoin ordinals reignited the Bitcoin block size debate. Back in 2017, the different fractions couldn't agree, and in the end, Roger Ver and others forked the Bitcoin chain, and from August 2017, there was another Bitcoin called Bitcoin Cash, which started trading at about 10% of the regular Bitcoin's price. So in a way, you could say that the market bet 10% that Roger Ver's Bitcoin Cash would become the Bitcoin and 90% that the regular Bitcoin would remain the Bitcoin. But as we learned, because of Roger Ver's early Bitcoin investment, he had a lot of money, and so did other backers of that track. So what happened in 2017 was this. Now we're looking at the Bitcoin Cash versus Bitcoin chart. 4 hours time frame on Kraken. It started at about 0.1, then it went a little bit up and down, but then it looked like the momentum was failing and price hit about 5%. So you only got 0.05 BTC for one Bitcoin Cash. But then what happened? Price continued to 0.1, and then just in a few hours 0.2, and just a few hours later 0.3, 0.4, 0.5. I think Roger Ver lived in Japan at the time, and especially on one Korean exchange, Pump, big volumes were pumping out. And I remember I was sitting that day chatting with some people. What's gonna happen? If it has gone to 0.1, 0.2, 0.3, 0.4, 0.5, it can go to 0.6, 0.7, 0.8, 0.9, 1. 1.1 and 2 Bitcoin, and then it would basically flip Bitcoin and become the Bitcoin. And notice the time frames here. At midnight UTC, that seemed impossible. 4 hours later, it seemed like it's actually gonna happen. And then what do you do? What do you sell to? What do you buy? Which one is the Bitcoin? And what happens then? Which exchange is gonna go bankrupt? And remember, at that time, no one really trusted USDT either. So during those hours, there was no safeguard. No one knew what was going to be Bitcoin, and if there was going to be anything left a few hours later. Then what happened was that Pump basically pulled out the plug to the exchange. The whole exchange went down and the momentum died. If we play a little forward, the price started coming down again, the parabola you see here broke, and price never really recovered from that. The coup attempt was over, and if we switch time frames, we see that this chart has basically been a straight line down on the log chart ever since. It actually formed a very neat wedge, which has now broken out. If you recall a couple of DCA episodes ago, when we talked about these ordinals, I was looking at the BCH and BSV charts. At that time, of course, I only thought about the possibility of the block size debate to reappear. But then something else happened, as we saw in this Decrypt article. CEO of EDX Markets deemed that the 4 crypto tokens listed on EDX Markets, Bitcoin, Ether, Bitcoin Cash and Litecoin, were safe bets in terms of compliance with the United States Securities and Exchange Commission, which we learned from this great song that I shared a couple of weeks ago.
Bitcoin, Ether, Litecoin, Bitcoin Cash.
The SEC realizes it's a security.
Why did I name those 4? They're not securities.
But generally, explanations like this about why something is pumping, I think has actually limited interest. At least to me, because it's so easy to manipulate narratives. If we instead use this coin as a trading tutorial, then let's look at Bitcoin Cash versus US dollar on Coinbase. And we start more recently, so say 2020. Then trend turned up, Larsen line was gold, and price went into this parabola. From about $200, the parabola broke at about $1,085, which is an exit trigger, and the second exit trigger would exit here at 640. Average exit 860. Then came a few fake entries. Trend turned up, but then got stopped out on this head and shoulders confirmation. Trend turned up again, got stopped out again at similar price level. And if we continue one more time, trend turned up, 122, got stopped out again at 120 something. But then we see something very, very interesting. I backed price up here about a week, and I want to draw your attention to this enormous volume profile here on the right. What does that mean? That means that there has been huge buying and selling activity happening here in this price range. This is an accumulation range from here to here. Draw it out here so you see it clearer to the volume profile. So big buyers have sat here and accumulated big volumes. And then what happened? Price pumped distinctively out of that range. This is the same thing that happened with Bitcoin price at the bottom, if you remember, which was the reason I bought that 17,433 that you remember I've talked about many times. So if you were awake and watching this chart here, you could probably make a very good risk-reward entry on the confirmed breakout here, maybe around 150. Even before the trend turned up. But if you were asleep at the wheel, which I was, for example, I did not watch this chart last week because I was busy doing other stuff. Then fortunately, Larsen Line Pro got you covered. Then you got an alert that on the 24th of June, Larsen Line turned up against the USD for Bitcoin Cash. So if we play forward a little, zoom in so we see better. When we woke up on the 25th, the gold flip had locked in and there was a chance to get in at about 200 somewhere along this candle. Little lower if you were lucky. Such a lagging indicator. It's already up 100%. That is true, but let's look what happened then. Price consolidated and then it continued up to 308 as I'm recording this. And it's been up at 326 today on this massive pump. The reason that technical analysis works isn't that it's some magical lines. It's about people. The people who accumulated huge amounts here. They suddenly start pumping it. And then everyone who were short here are going to have to start buying back those coins at higher and higher prices because that's how shorting works. You have to give the coins back in the future. So they have to buy them. Then price pumps even more. That's the short squeeze. And then these people who accumulated down here at 100, they're now up 3x. When I posted this in our Discord earlier today, one of our members wrote, how do you know at the time that the parabola break isn't when it drops from 800 to 450 earlier in the year? Which was an excellent question. So he's asking, how do we know this was the parabola and not this orange parabola that I've drawn here? Because if we go back to this point, it very much looks like this would be the parabola and that it broke here when price dropped from near 800 down to 400 something. So how do you know that it's the black one that's the parabola and not the orange one at the time? And the answer is, you don't. You don't know that at the time. Here it definitely looks like this orange parabola has broken, and the correct action from classical charting perspective and the Larsen line process would be to exit partly here. And it's only later, when it seems like there is still a lot of strength in this chart. The trend isn't turning down as we would expect. Instead, we just got a solid double bottom here in the chart. First bottom, second bottom, price moved up to the neckline and crossed over that neckline. Here we have a super bullish chart construction. Larsen line is still gold. We didn't start breaking down like this. Instead, we're moving up towards these positions. The correct action here would be to buy it back. If you're lucky, maybe you could even buy it at little bit lower prices than you sold. And then prices continued up from there. And you can see that this resistance turned into support, price held, and now we get a similar parabola break again. You have to act exactly the same way, sell again, and see if you find new strength. Only this time you see Larsen line turn down instead of prices finding strength and continuing up like it did the previous time. So that was excellent question. Okay, so what to do now then? Is it now a good time to buy? Generally, it's almost never a good idea to chase after an entry. Valid entries here were either at the range support. You see that this range support held many times. 1, 2, 3, 4, 5, 6. When you see a wick like this, wick means that the candle doesn't close below the level, it just goes down there briefly to trick everyone. Then price reverts back, meaning there was enormous support below here after the 6th touch on support. So actually the first valid entry here was around 100. The second valid entry was on the breakout because of this enormous volume profile with a point of control inside the range. Breakout from that, POC below, solid entry. The next solid entry was really on the trend confirmed up here at about 200. But now it's very difficult to argue for an entry here. See, now we have come up to this area, which was both support and resistance before. Might be resistance again. No idea what's gonna happen. There's just been a giant pump. And the reason that chasing missed entries is so risky is the following. Where would you put the stop loss now? If you buy support, that's always the best, because then stop loss is kind of just below the support. If you buy range breakout, stop loss is back in the range. Control the downside. If you buy trend direction, the trend has to remain up. If you buy now, where would you put the stop loss? There is nowhere here to put the stop loss that doesn't expose you to a huge downside. So the risk versus the reward isn't as good compared to if you can have a tight invalidation of your entry. If you want to join, go to ctolarsson.com. Course and indicator is open here. If you want the pro tool, you click here. Hope you learned something. Thank you, tack. CTO Larsson out. Hej då.